Hey everybody, welcome back to my channel. In this video, I'm going to go over the October 2021 jobs report produced by the Bureau of Labor Statistics. If you like my channel and the content that it provides, make sure you click that like button on the video, subscribe to my channel, and hit that notification bell so that way you're notified whenever I upload any kind of new content. Last week, the Bureau of Labor Statistics published the jobs report out of October 2021. And I found it particularly striking. I want to go over the details of this report because this can have profound ramifications for what's going on in our economy right now and what that means for the future. Now, if you've been listening to my channel, been listening to my past videos, I've been very pessimistic of our economy based off of three factors. Number one is obviously the levels of debt in our system. We have a huge amount of both private and government debt that is weighing down our economy. Two is that we are being hit with high amounts of price inflation. They're the highest amounts that we have seen in the last 15 years on the consumer price front, and they're the highest amounts that we've seen in over 30 years, actually over 40 years in the producer price front. But the last part, and I think this is the driver of it, has been the amounts of government spending in our economy. Those are particularly concerning regardless of whether you fall into the Keynesian school that believes that accommodative government policies are needed to support the economy. That's a signal of just how weak our economy is to have to be buoyed by this much of government support. Or if you fall into the more classical camp like I do, that is more pessimistic, that says the more government intervention we do have in our economy, the worse things become. But this jobs report was actually very good. So overall, top line numbers came out. It was 531,000 jobs created. Now, on any given month, that's spectacular. But obviously, since we are coming out of a pandemic and we're kind of playing catch up on employment gains, you know, it's a very, very good number. Certainly much better than what we saw back in September, which was 312,000, which was again a good number on its own, but definitely a strong increase in October. It becomes even more pronounced when we realize that this is net of government jobs, okay? So there was negative 73,000 government jobs. So private sector jobs created was actually over 600,000, and I think that that is exceptionally good news, especially when we realize that over a sixth of the jobs created came out of the goods producing sector, okay? Now, for a frame of reference, and you can take a look at back in August 2021 and October 2020, goods producing jobs comprises about 1/8 of our total employment. So, and it has been lagging behind the rest of our employees' employment sectors, with the exception of leisure and hospitality and other types of services support, ever since we came out of the pandemic. So the fact that we are catching up and we actually had over 15% of the jobs created in October was in the goods producing sector, definitely a very good sign that our economy is getting back up and running. Also important to note is that we're seeing another month of strong gains in transportation and warehousing. We've been having issues with backlogs, particularly concerning our ports in New York and Los Angeles, where there are records amounts of backlogs here of ships with containers that cannot be unloaded at the ports, and any kind of gains in transportation and warehousings will help relieve some of that pressure of those bottlenecks, which are certainly pressing up prices. I'm going to make a video on that probably either tomorrow or Wednesday, talking about what is really driving those factors, but it basically boils down to three things, and one of them is definitely labor. So labor is one of those things that's becoming solved right now. Now, I do want to take a couple of minutes to go over the employment sector, and I guess I'll start with that transportation and warehousing. So although we're seeing the relief in transportation and warehousing, transportation jobs in the trucking industry have not recovered to their pre-pandemic levels, and indeed what we really should have been seeing is an increase in those jobs from the pre-pandemic level. So the peak jobs of truck transportation reached was about 1.5 million, okay? So 1.5 million jobs was in truck transportation. And now we're still at, just underneath that 1.53 million jobs. We're at 1.515 or, 1,515,000 jobs created. And we really should be pushing past that, probably close to 1.6 million. And the fact that we're not there, is one of the indicators of why we're seeing shortages because of the breakdown in the logistics industry. Air transportation has also not recovered. That's a huge one. And although a lot of this contains civilian transportation for going on vacation and trips, we have to remember we also use air transportation for shipping goods. And the fact that air transportation jobs have not recovered back to their pre-pandemic levels is definitely a very concerning sign, because that means more dependency goes on truck and rail, which are already overwhelmed. And again, there's supply shortages there. On the other hand, though, warehousing and storage is through the roof. So plenty of jobs in warehousing and storage. The real problems comes in the actual transportation. And then on the aggregate side, we can see that we're still about 4 million jobs shy of where we should be, actually a little bit over 4 million jobs shy of where we should be when we take a look at all employees. And again, a lot of that has to do with the leisure hospitality due to the effects of the presence of COVID, the government shutdowns, the constraints, any kind of mandates or health safety concerns regarding the pandemic, and also not regarding the pandemic. Other types of health safety concerns are also creating those kinds of blockades in that industry. But in my opinion, those sort of supporting services, when we do the leisure and hospitality, those are the weakest sectors of our economy, because it's not actually producing goods. The fact that we're getting back to producing real goods here in the United States, definitely a good sign if we see this on a sustained level. So again, we were double what we were in August 2021, and we increased by, over 70% of where we were in September 2021. So great 1 month jobs, but 1 month statistic, a trend does not make. The rule of thumb that I have is when we see 3 months of consistent statistics on that tells me a trend has been established. So once is an anomaly, twice is a coincidence, 3 times is a trend. So if we see this for 3 months, for October, November, December, definitely a very good sign, particularly if we see the transportation warehousing industries pick up. That's all I've got for tonight, guys. I appreciate you for watching this video. Make sure you just leave a comment. Let me know what you think about all of this. I'm not always doom and gloom, but definitely this is a good sign. I call it like I see it. There are things still on the horizon about our economy that are especially problematic. I'm going to go over those in the coming days and weeks, so stay tuned for that. I have been very much watching and been very aware of what's been going on in our markets. I'm definitely going to produce some commentary on that and give you some insights into where I think we may be going. So once again, I thank you for watching, and I'll talk to you next time.